What if I told you that after years of tightening the economic screws on China, India has just quietly opened a door again? And the first sign that something has changed is already here. India has received 29 foreign direct investment proposals worth 4,895 crore rupees, more than $500 million under its revised investment rules. The proposals cover sectors including IT, artificial intelligence, manufacturing, pharmaceuticals, data centers, and transport. But here is what makes this interesting. This isn't simply about $500 million. It could signal a much bigger change in the way India deals with China. Because after the 2020 border crisis, India had made one thing very clear. Chinese investment would not get an easy ride into India. But now the rules have changed. And the question is, why? Let's go back to 2020. India and China were already economic competitors. But after the deadly border clashes in Ladakh, trust between the two countries collapsed. India responded not only militarily and diplomatically, but economically. The government introduced tighter scrutiny of investments from countries sharing a land border with India. In practical terms, Chinese-linked investments were pushed into the government approval route. The message was obvious. India would not allow economic dependency to become a national security vulnerability. And for years, this remained the broad direction. But India never completely stopped doing business with China. And that is important because India may have wanted to reduce its dependency on China, but replacing China overnight was never realistic. China is deeply embedded in global manufacturing, electronics, machinery, chemicals, components, industrial equipment, and increasingly technology. So India faced a difficult contradiction. Strategically, China is a rival. But economically, China is still extremely important. And now India appears to be trying a new approach. In May 2026, India revised its foreign investment framework. Under the new rules, certain foreign investors with up to 10% non-controlling beneficial ownership linked to a land border country can use the automatic investment route, subject to sectoral limits and other conditions. That sounds like complicated bureaucratic language. So let's simplify it. India is not saying, China, come and buy Indian companies. Instead, India is saying, if Chinese ownership remains below a defined minority threshold and does not give control, investment can be easier in qualifying cases. That distinction is extremely important because the door has opened, but India has not removed the security lock. And look what happened next. By August 20, the government had received 29 proposals worth 4,895.65 crore rupees under the revised framework. And look at the sectors involved: artificial intelligence, information technology, manufacturing, pharmaceuticals, data centers, transport. These aren't random industries. These are industries that India desperately wants to expand. And that is where the bigger story begins. Because India isn't simply looking for Chinese money. India is looking for capital, technology, supply chains, and manufacturing capacity. And China happens to be extremely powerful in many of those areas. But is India becoming friends with China? No. And this is where the headlines can become misleading. India opening a limited economic door does not mean India has abandoned its strategic concerns about China. In fact, there is an extraordinary contradiction happening. On one side, India is making it easier for certain China-linked capital to enter. On the other hand, India is simultaneously trying to reduce its dependency on Chinese industrial equipment. For example, India is preparing a roughly $1.2 billion incentive program for domestic production of advanced construction and infrastructure equipment, partly because India currently relies heavily on imports, including from China. So what is India actually doing? It looks less like India is choosing China and much more like India wants to use China without becoming dependent on China, and that is a very different strategy. This is the real game. Think about it this way. For years, India's strategy was reduce Chinese influence. Now the strategy appears to be evolving toward reduce strategic dependency while selectively allowing economic cooperation. That is much more sophisticated. India doesn't necessarily need to choose between China or the West. It wants to work with multiple powers: America for technology and strategic cooperation, Japan for investment and manufacturing, Europe for capital and markets, South Korea for electronics and industrial expertise, and China where Chinese capabilities can provide economic value. This is essentially strategic diversification. And India's greatest advantage is its market. Everyone wants access to India. But there is a big risk. The danger is obvious. If India becomes too dependent on Chinese components, technology or capital, then economic cooperation can eventually become strategic leverage. And India already knows what dependency can look like. Imagine a future where an Indian industry relies heavily on Chinese companies for critical components. Then imagine a geopolitical crisis. What happens if supplies are suddenly restricted? What happens if technology access is interrupted? What happens if companies with foreign ownership gain influence over strategically sensitive infrastructure? That is exactly why the government has kept restrictions, sectoral caps, and security safeguards. The objective isn't unrestricted Chinese investment, it is controlled engagement. And China has its own calculation. China also benefits from this. China's economy needs new markets, and India is one of the world's largest and fastest growing major economies. If Chinese companies can participate in India's growth story, they gain access to an enormous market. But there is another dimension. India is becoming a major alternative manufacturing hub as global companies diversify beyond China. So China doesn't want to completely lose India's market either. This creates an unusual situation. India wants Chinese capability without Chinese dependency. China wants access to India without losing its competitive advantage. And both countries know they are competitors. So has India really opened the door to China? Yes, but only partially. And perhaps that is the most interesting part of this entire story. India isn't going back to the pre-2020 relationship. It isn't throwing open the gates. Instead, it is experimenting with a controlled economic opening. The message seems to be trade with China, yes. Investment, potentially. Technology, where useful. Strategic control, absolutely not. And that tells us something important about India's foreign policy. India is becoming increasingly comfortable with one idea. You don't have to be someone's ally to do business with them. And in a world where America and China are competing for global influence, that flexibility could become one of India's greatest strategic assets. Because the real question isn't, is India becoming closer to China? The real question is, can India do business with China without becoming dependent on China? If India can pull that off, it may have found one of the most powerful ways to play the new geopolitical game. And that could affect not just India and China, but the balance of power across the entire world.